gonna do, $1 on CryptoBullGod and his crypto maniacs and the entire cryptocurrency market run wild on you.
Welcome in. I am the CryptoBullGod, and this is the recorded on Tuesday, airing on Tuesday, December 14th, 2021 CryptoBullGod podcast. You can find me on Twitter, Tradingview, YouTube, and Instagram at CryptoBullGod. So real quick, before we get things started, if you do appreciate these podcasts, you appreciate the TA videos, you appreciate this channel, the thing you can do to help spread this content throughout the community, quickly just hit the thumbs up button, like the video, subscribe to the channel, drop me a comment. I've gotten kind of caught up on most of the comments out there on YouTube, so I like engaging with everyone. So feel free to drop a comment. I really do appreciate engaging with everyone on both Twitter and YouTube. Just a quick reminder about the podcast I'm doing with my brother. So it's actually been a little bit longer of a time frame just based on schedules than when we were able to put together a new podcast for CryptoBroz. But CryptoBroz, I'll leave a link in the description. There is going to be a new podcast that we're going to be recording. My brother and I, CryptoBringer, very active Twitter member within the crypto community. So he tweeted last week, so I made sure to like, retweet, and comment the fact that he was actually tweeting on Twitter. So my brother and I are going to be releasing a new episode of CryptoBroz tomorrow. Well, we're going to be recording it Wednesday. It'll most likely drop by Friday. So if you're not subscribed to that channel, and if you appreciate the content that I produce, you definitely need to check that channel out. It's something that, starting next year, I'm anticipating we're going to pick up the pace on and start to gain some traction. I have a lot of big aspirations for that channel. So check it out if you have not already. So right now I'm actually, for those who have been subscribed to the channel for a while, I grew up in the Northeast. I live in South Florida. I've been down here for about, 9.5 years. But I'm actually up in Northern Florida right now. And it just amazes me how much the temperatures can differ between Northern and Southern Florida. As I checked the forecast today, and where I'm at in South Florida, the temperatures are around 80 degrees. It's sunny. It's beautiful outside. And where I'm at right now in Northern Florida, it's in the 60s, and it's a little cloudy out. But still very comfortable temperatures. Very comfortable temperatures, and much better than living where I used to live. And actually, I was on a business call earlier today with some folks who live in the Minneapolis area. So much better than those bone-chilling temperatures. But yeah, I'm up here and visiting the CryptoBullGoddess, and we were doing a leg workout this morning. And we finished off the leg workout with walking lunges. Okay, so 4 rounds, going across turf, 8 reps per leg, and I'm doing 70s. I have 70-pound dumbbells. And she started with 35, and she decided to jump up to 40 pounds. Well, I already have a love-hate relationship with leg day, and I sort of have a love-hate relationship when working out with her, because she does push me. Pushes me in a very good way, but pushes me. And as soon as I saw her, and I don't know if anybody here can relate to this, whether if you have a workout partner, but you see them bump up in weight, and you feel like a bit of a pussy if you're not jumping up in weight. So, and the thing is, the kettlebells, we were using kettlebells. The kettlebells did not go from 70 to 75 pounds. They didn't go up in 5-pound increments. They just went from 70 to 80. So essentially I was making a 20-pound jump in weight. And it was nice because those first 3 rounds I had gotten so accustomed to the 70 pounds, and it really wasn't that bad. And I was thinking to myself, I'm going to get through this 4th set, and I'm going to be just fine. But then the CryptoBullGoddess jumped up in weight, and I, of course, had to not be a pussy, and I had to jump up in weight. And so I jumped up from the 70s to 80s, and that was a little brutal. So great end to the leg day today. Definitely had a good start to the day. Did want to real quick just say For everyone on Twitter who's been engaging with me lately, I've kind of said this in the past before, but I do apologize if there's been some replies to certain tweets out there, things I just haven't had a chance to reply to. I'm not ignoring anyone out there. It's just most certainly I love engaging with everyone. It's hard sometimes to keep up with everything. I'm trying to get content out there to help everyone out. As you know, this channel is not. It prides itself. I pride myself on not creating hype material. So I'm just looking to educate and help everyone. But in order to put the time in that's necessary to do that, I just, it's impossible to be replying to everyone or within a fast time frame. So apologies if I haven't gotten back to you. But I have noticed on Twitter, it is officially in the crypto market. It's not alt season. It's not a bull market. It's not a bear market. Nah, we're just going to call it salty season. We have officially entered salty season at some point last week. It's that time of the year where you can really tell who the educated individuals, I'll call them the educated professionals are in this space, and who the amateurs are. So, look, even as somebody who's very well educated and before investing in this market had quite a bit of experience in investing in general and trading, in the stock market, I can tell you that cryptocurrencies are a much different animal, right? And if you didn't realize that coming in, you know it now. But these growing pains, I'll call them growing pains, if they're handled in the right situation, they can benefit you. If unexpected twists and turns occur in the market, it provides you an opportunity to self-reflect and it provides you an opportunity to ask yourself, why am I becoming emotional? Emotions are a money killer, as I always say. And these unexpected twists and turns we get, what can I learn from this? What can I learn from this? And I'll get into the Twitter questions towards the end, but someone asked me a really good question that I'll answer or respond to. But I think, the action that we've seen in November and December, I know it was not what I was expecting. And so it certainly provides an opportunity for me to learn about what's going on within this cycle, so that I can continue to maximize my investment portfolio moving forward. But you're going to have this. I mean, there's a lot of people out there that really come at you during this time of year, and I've learned more and more, you have to have a thick skin to really be active on Twitter, because what you realize is, as beneficial and as awesome as it is that I think to myself, I have the opportunity to interact with people globally from all over the United States, the USA, and from other countries as well. You have to figure that if the pool of individuals that's being that you're opening yourself up to, it casts a wider net, right? There's a wider net of individuals. Well, if there's a wider net of individuals, as awesome of an experience as that can be, there's also the greater potential that there could be some douchebags within that net, right? Doesn't that make sense? And so you just need to keep that in mind, and you need to have a thick skin, and you need to continue forward. But for all the individuals out there, people who I interact with on Twitter, whether I'm liking a comment or dropping my own tweet within a tweet or retweeting something, or the cases, those are the people, not all of them, it's not mutually exclusive, but those are a lot of the people who I really appreciate in this space, who are doing their best to continue to educate others and or engage in a positive way, right? Because as I've said before, this market can turn quickly. So, as bearish, and by the way, we're not in a bear market, but as bearish as price action is right now, things can very quickly turn around, and then everyone's happy-go-lucky rainbow unicorn sort of scenario. So, I just think it's important that even though November and month-to-date December have not gone, I know as I personally have been suspecting, it's important not to lose sight of the bigger picture. And the bigger picture and again, I want to get a video out there whenever I have the time. I'd like to get a video out there that kind of shows the data points I'm looking at. But look, there's a lot of good chartists out there and a lot of good people in this space that kind of point a lot of these data points. But the data points that I'm evaluating are telling me that the market has not topped, right? So you can't lose sight of the bigger picture. I keep stressing this over and over again. Just because price movements week over week or month over month aren't exactly mirroring what you thought or what you expected, and things are going to take a little bit longer until we reach that euphoric top, in my opinion, and others' educated opinions as well. Don't lose sight of that bigger picture. And if you really have that true educational foundation upon which you've built that thesis that we have not topped, then whether it takes an extra 1 month, 2 months, 3 months, 4 months, 5 months, or even 6 months, should it really matter? If you think Bitcoin's going, $150,000 plus, and your altcoins are going to do a 10x from here or more, I mean, if you really felt like that was a very strong, the strongest of scenarios, and you just couldn't tell exactly when, why would you get emotional about any of this stuff and get salty, right? So just don't lose sight of the bigger picture, which is the fact that we have not topped. So one of the things I wanted to hit on in this podcast is the 12-hour chart that I made a TA video about I think it was actually last Sunday. Not this prior Sunday. Let me pull up the calendar here. Oh, man. Windows, you suck. Here we go. So it would have been Sunday the 5th. I think I made it Sunday night. Yeah, I'm pretty sure. Sunday night the 5th. So I've gotten a lot of positive feedback. So the first thing I wanted to say is I wanted to thank everyone for the engagement there. I've gotten a lot of positive feedback. For me, I mean, I have a small channel, right? So the fact that it has 3,100 views for me is, within the span of a week is awesome for my channel. So I really want to appreciate the comments, the likes on the video, and the interaction. Very, very much appreciated, because I felt like I put something unique out there that was value added for the space. This is something I didn't really explicitly state, but the way I looked at it, okay, this should make sense to you. The way I look at it is I view the crypto community as having many well-educated people within the space. And these well-educated individuals are all making a contribution towards putting the puzzle pieces together of the greater picture, right? So the puzzle pieces being, well, let's look at this data science model. Let's look at the stock to flow model, and let's evaluate that. And then someone else is putting out an analysis on a 1 month chart. Let's look at that. Let's look at this weekly chart. Let's look at this cycle fractal. And I'm taking my puzzle piece and sticking it in the greater picture of, hey, let's look at the 12-hour chart. So my perspective is, look, there's a lot of other people out there, okay, a lot of other people I respect who speak very well on certain key, historically important data points, okay? But one data point, one statistically significant, I would argue, data point that no one has been talking about is the 12-hour chart. And let's just hit on a little bit of why I view the chart as being significant, because I didn't really go into as much detail on the TA video, but I wanted to kind of supplement the video with some commentary here that I think would be helpful. So, and one other thing I should speak to actually first before I go into the detail is one, based on some of the feedback I've gotten, there certainly seems to be some misinterpretation in terms of some of what I was aiming to communicate on the video, as well as why it's historically significant. So I want to kind of clear some of that up. And the other thing that I wanted to speak to is I do plan to create a follow-up video just on the 12-hour view to speak to currently what is going on and what that says to me as an analyst on that 12-hour chart and what it could mean for the price, probability-wise, moving forward. So I am going to be putting up an updated TA video on Thursday, so I hope you plan to check that out. By the way, if you haven't yet, drop a comment, leave a like, and subscribe to the channel. Spread it around the community. I mean, spread the channel around the community. I only have 1,400 subscribers on here. I'm hoping to get well north of that and be a little bit more, influential in the space to help others out, next year. So let's kind of talk about why. It's because it's kind of hollow in nature if I say, well, it's statistically significant. The 12-hour chart is statistically significant. End of story. Let's move on. So let's actually kind of spell out why that's the case. So I think that you're doing a good job of challenging me if you said to me, hey, CryptoBullGod, hey, CBG, you always talk about candlesticks and, how they represent time. So each candlestick represents some sort of price action within a time manner. Whether it's a 5-minute chart or a 1-week chart, every candlestick represents that respective time frame. And you said the more you zoom out, in general, the more credibility you have. Like if you look at a 1-week chart or a 1-month chart, it has kind of bigger context, or whatever's going on has a little bit more weight behind it than looking at a 4-hour chart. Okay? You're correct. So if that's the case, why are you talking about a 12-hour chart? I mean, this thing is less than a day in time frame. So how can this thing be statistically significant? Well, that's a great question. First off, let's not lose sight of the fact that a 12-hour chart is 1 day's price action cut in half candlestick-wise. So if you're looking at a chart, right, if you're looking at a daily chart, every candlestick represents 1 day. And if you had a week's worth of price action, that's 7 candlesticks, right? 7 daily candlesticks. Well, now if you look at a 12-hour chart, you have 14 candlesticks because you're chopping the price data in half. Hopefully that makes sense. Hopefully everybody listening knows there's 24 hours in a day. So why would a 12-hour chart be statistically significant? Well, first off, what I did with that chart is I utilized a very well-known moving average, specifically the 200 simple moving average, which is a point of reference for chartists, usually on a daily time frame, maybe a weekly time frame, but it is a moving average that has a lot of meaning to other chartists. Okay, so it's very normal to evaluate price data, whatever time frame you're looking at, using that 200 simple moving average. The second thing I would say is, based on that 200 simple moving average, what I was able to do was I was able to use 9, I think it was 9.5. I don't want to get confused on it here, what the time period was. I think it was 9.5. 9.5 years of price action relative to that meaningful moving average. And I was able to come out with a series of outcomes, right? Meaning, when the price action interacted with a very meaningful moving average that everyone looks at as a chartist, what happens when we actually go through this event where candle bodies close below it? Now, once that outcome occurs, there are kind of 2 scenarios, right? We can either quickly recover in price, or we can have some quote-unquote extended period of time when we actually remain below the 200 simple moving average. So we have a series of events where candle bodies over 9.5 years of data on a meaningful moving average have closed below it. Now, based on that, okay, I think there were 14, off the top of my head, I think it happened 14 times in 9.5 years. 14 events. And of that 14 events, there was a scenario. There's either, again, there's 2 scenarios. Either you quickly recover and get candle bodies back above it and have sustained movement upwards, and we continue our bullish trend, or you have sustained movement below the 200 simple moving average before you regain momentum and continue skyward, up towards the blue skies with bullish momentum, right? So I was able to identify, based on those 14 events, I was able to identify that for the majority of them, I think 9 times, I think it was 9 out of 14. 9 out of the 14 times, look, we were under there for a significant period of time. Whether it was close to 2 months or it was a year, we were under there for a long period of time. The other thing that I was able to add to that picture of what was going on and the probabilities, the outcomes and scenarios, and what it meant from a probability standpoint, I looked at another meaningful event on a chart that all chartists look at. a death cross. And again, some people are sort of confused by this. I could tell some people, I got a comment that suggested either someone literally didn't watch the video or wasn't paying attention. Because what I spelled out in the TA video is that while it's most common to look at a death cross on a one-day time frame, which is where that 50 simple moving average crosses below the 200 simple moving average, a death cross can occur on all sorts of time frames. All it means is that 50 is crossing below the 200. That's all that's going on, all right? It can happen on a 4-hour chart. Could happen on a 5-minute chart, okay? The point is, I looked at another meaningful assertion of whether something is bullish or bearish, in this case bearish, and based on those 14 events, I was able to come away with a statistically significant probability that said, look, if we get a death cross with these 14 events where we get candle body closes on a 12-hour time frame below the 200 simple moving average, look, 90% of the time when that happens, we're under the 200 simple moving average for an extended period of time. How is that not statistically significant? And the other thing I should add to this is that Bitcoin has limited price data. 9.5 years of price data is not a ton of price data to move on. So one of the things that you will note when you're evaluating some of the other technical analyst views of other charts out there, whether it's a weekly or monthly view, I would say one of the pitfalls, or one of the, no, I wouldn't say pitfall, I don't think that's the right word. One of the downsides to evaluating a weekly or monthly view on Bitcoin is because there's 9 years of price data. I think it's 9.5. Sorry, I keep saying 9, but let's say 9 to just keep it simple. Okay, if you're looking at 9 years of data, let's look at a monthly view, for instance. How many candlesticks are on that chart? 12 times 9, right? So that gives you. I'm not good with math, so I think that's 108. That was a poor joke because again, I'm an actuary, so that was a bad joke. So when you're looking at a chart on a monthly view, as credible as a view that I always say, when you kind of zoom out, it lends itself to more of a more meaningful view when you have more price data within each candlestick. I just clapped my hands. The downside to that, however, is you only have 108 candlesticks. Versus, and I'm not going to be able to do the math in my head on this, if you're looking at a 12-hour chart, which is a day cut in half, well, now you're taking 300, and now I'm going to do the math. I'm forced to because this is my personality. You have 9 years of price data. You have roughly 365 days in a year. If you count leap years, really, I think the technical thing you should do is assume 365.5, but we'll simplify our lives and assume 365. You have 365 days in a year, which means in 1 year you have roughly 730. You have 730 candlesticks on a 1 year time frame on a 12-hour chart. 730. Take the 730, multiply it by 9, you come up with 6,300 plus 270, 6,570, I believe. So on a 9-year time frame, on a 12-hour chart, you have, what did I just say? Six, now I'm losing numbers in my head. On a 12-hour chart, the point is you have 6,570 candlesticks. That's a lot more statistically significant than looking at a 1-month chart and looking at 108 candlesticks, right? So that's the other thing that makes this statistically significant. We're not zooming so far out on the chart, we're not zooming so close in on the chart that we're examining 5-minute candlesticks. That would be absurd. Let's exercise some common sense and logic. But we're cutting, I think it's very reasonable to say a 12-hour chart in general it's a semi-zoomed out view. It's a day cut in half. And based on all the information that I just shared with you earlier, you have 14 events that led themselves in these statistically significant directions that over time have played out in certain ways more than not, right? So I think that this is just something, this 12-hour view is just something unique. It's something that just is typically not evaluated. There's not a lot of chartists I see evaluating a 12-hour chart. And it's something that just hasn't been discussed. And I found a lot of value in it. So I hope that based on having those 6,570 candlesticks, in the 9 years, speaking to the fact that there's so many candlesticks, there's so much more historical data implied by that within the chart. We're evaluating meaningful moving averages that all chartists look at. There's a greater number of outcomes, and I forget if I hit on this. There's a greater number of outcomes that I've looked at with this single event, right? Candle body closes below the 200 SMA. There are more events, more events than I've shared on that video that I've seen other videos speak to in regards to, there might have been 3 events that happened like this, and here's what happened, or 5 times this has happened in Bitcoin's history, and this is what's happened, or this has happened 4 times. I haven't seen anything out there that has said, 14 times this has occurred, and more than likely this is kind of how it plays out. And so, again, I think that this 12-hour chart that I put out there is going to be really interesting to look at moving forward to see kind of how things play out. And I'll kind of go into, I don't want to take all the momentum out of the TA update. So some of the other further commentary leading to sort of my own personal views of how things are looking right now on the 12-hour chart and what it actually means. I'm going to save that for the video, and I hope you choose to tune in because I think that I will do an effective job of explaining things in a very sensical way to not lose sight of what it is that I'm stating. So hopefully you choose to tune in and catch the update there. So with that being said, let's actually get into the chart of the week. For those who have been here for a while, first off, thank you. Appreciate your viewership. Woo! Look at this market today. Wow, Bitcoin's up 3%. Boy, I can feel some of the saltiness temporarily leaving crypto Twitter. The chart of the week, for those of you who have been here for a while, this won't come as a surprise. It's Bitcoin. Whenever there's a sudden shift in market momentum like this, oftentimes what I do is I'll speak to Bitcoin being the chart of the week because it really is. I'm not here to tell you what your own, we're not here to have a fundamental discussion on if you think a certain technology is better than Bitcoin. The fact, this isn't my opinion, the fact is the overall market is driven by the king, the current king of crypto, which is Bitcoin. It's just a fact. There's no argument there. So the reason I say that is because so goes Bitcoin, so goes the rest of the market. Okay? So it's very important. It would be to your advantage to put your tribalism aside if you have any, and to any project out there, any altcoin, and just respect the fact that right now it's the king coin. And so whatever it does, the rest of the market's going to follow. So I'm going to keep this real simple. If you watch the 12-hour chart, the chart that no one is watching, and you followed what's going on there, there's only one price level I'm really concerned with to the upside right now. And that's, the 200 simple moving average, which sits around 54,500 roughly. There was a poll out there on Twitter, not a poll, a prominent person on crypto Twitter posted a question, and the question was, where do you see Bitcoin closing at the end of the year? And I think he said the person who's closest will get his respect. I don't know what that means. But I decided to answer with 54,500, essentially the 200 simple moving average. So essentially my hypothesis is that, and it's also based on this 12-hour video that I put out there, we're right now, in my opinion, kind of trying to find our bearings and creating our new lower high. Again, if you kind of zoom out on the Bitcoin chart and don't get caught up in all the bullshit that's going on in the day-to-day, what you actually see are higher highs and higher lows, which are what? The basic building blocks of bullish structure, right? So right now we're just forming our base, it looks like, right in the, 46,000 area. I don't anticipate putting in a new low beyond the brief capitulation that occurred on December 4th. It looks like at down at like 42,000. I don't see us going any. I don't see us taking out those lows. So we're just trying to gain our bearings. And a scenario that I could see playing out is that we do start to rally, going into the end of the year, and we sort of close out right at that 200 simple moving average. January, maybe initially we see some decline in price, right? It's kind of, now that we've broken down below that 200 SMA on the 12-hour view, it's not going to be so easy to get back above it. Maybe we temporarily do break a back above it and then go below it, but we're going to battle that area for a little bit until at some point in January, maybe February, we do permanently break above the 200 simple moving average and continue our bullish momentum. So that's kind of my initial take on what's going on. So that's why I said 54,500. So for you, again, chart of the week is Bitcoin. Here's what I would keep an eye on: 54,500. And if you at least have a basic understanding of a chart, pull up Tradingview or whatever you use for charts. Pull up a 12-hour chart. Pull up the 200 simple moving average. I like to use pink. It's just what I was taught. That's my little color for the 200 simple moving average. And just watch that line and watch how price reacts with that line. That's the main thing I would be watching. And again, it's all based on the analysis that I provided within that video. So hopefully you watch the video. If you didn't, I'll include a link. And then you can also catch the follow-up video that I plan to record and release on Thursday. So now let's get into some tweet questions. Okay, these questions are in no particular order. So before we get into the Twitter questions, I just wanted to thank everyone for interacting here. Always appreciate the interaction. And based on some of the questions this week, I can tell that I'll be better prepared for some of these questions once I can actually begin spending a little bit more time in the crypto community. I do have a 9 to 5 right now, so it's kind of hard to spend as much time as I would like within the crypto community, but that'll change at some point next year. So the first question here: can we have a percentage breakdown or split of your crypto holdings, please? Graham Evans. So Graham, one of the things I kind of hit on here, I've hit on early on a few times. Maybe you're a newer viewer. I don't give that information out. So I think Thinking Crypto, Tony. I haven't been as actively engaged with his channel lately, but I know I've watched a lot of his channels, I've watched a lot of his channels. I've watched a lot of his videos from the past, and I do know that he was one who used to give out a percentage breakdown. So I just believe that is my own personal information, and I have no reason to share that with anyone. So that's just my view. So I would never give out, I'm 10% here or 20% here. The most I do, and I've said this before, is I tweet on charts that I'm personally interested in. So you can kind of take a hint there. And if I'm really emphasizing something, like the holy crypto trinity of HBAR1 and Mana, you better believe that I have a fuck ton of it. But beyond that, I don't give percentage breakdowns of my holdings. That's personal, private information. So thank you for the question, but I don't go there. Great question here. So since HBAR broke structure, will it take months to recover? So HBAR has had quite a bit of weakness. What I don't like to see in the chart, let me tell you what I like to see and then what I don't like to see. What I don't like to see is that on the weekly view, we have a candle body close below. I mean, we're below the 50 simple moving average right now on the weekly. I do not like to see that. That's es no bueno. What I do like to see is that there are still higher highs and higher lows being created. So if we can get past the fact that we're below the 50 simple moving average, it's expressing a lot of weakness in the price action. If you go back in time and historically look at the price data and see how many of course, on the weekly, there's not a lot of price action to play with the 50 simple moving average. But to me, it looks like this would represent a very good buying opportunity on HBAR. It's pretty suppressed in value. But what I was going to say is when that candle on the 21st of June, we created a low at, it looks like, it's not coming up. Where is it? On the 21st of June, we created a low of 13.5 cents. And right now we hit a low at the end of November. We hit a low of 20 cents. So basically what I'm saying here is we're still creating higher highs and higher lows within the chart. So that's what I like to see. So as much weakness as there's been in the chart, if you zoom out and kind of look at things, we're still creating higher highs, higher lows, which is bullish structure. Now, The question, though, let me get to your question because I didn't actually answer your question. The question is, will it take months to recover? Yeah, I do think this is going to take some time to recover. Of course, so goes Bitcoin, so goes the rest of the market. But what I could see is maybe a relief rally coming in here towards December. Again, I'm just hypothesizing. January, we sort of gain our footing, and then maybe February, March is when we really start to see some increases in prices. So it is going to take a couple months. We just have to be patient here. This isn't anything that's just going to recover overnight. Yeah, a couple months would be my best. To really recover in price, a couple months would be my best guess. Thoughts on staking? I mean, I think staking in general seems very advantageous to take part in. I believe, the only project that I'm currently that I'm actively staking is Harmony One. So I think staking overall is something that, especially within the bear market, the bear cycle that we will be entering at some point, once we're deep into it and prices are super suppressed and you have 90% plus corrections in your altcoins, staking is something that I plan to heavily not only evaluate what my best options are, but partake in probably by 2023 once things are super, super suppressed in value. So I think staking prevents an incredible opportunity. Now, here's another good question, although I don't know the answer to it. This kind of gets into what I said earlier. And basically, this has to do with insights into VeChain. So I'm not really super familiar with VeChain. And I didn't evaluate the chart coming into the podcast. If I have an opportunity, I'll actually put out a chart out there. Blue collar guy in Chicago. That's a super original Twitter name. So sorry I didn't have a chance to chart this before the podcast. Thank you for the question. One, I'm not familiar with the project too much, so I can't really respond to the question. But I can at least try to chart it and stick out a chart, so thank you for the question. Here's a question on the lengthening cycle from Benjamin Cohen's view of things. So thank you, Yanchi, for providing the video that he speaks to this on. This is something I have not watched. So what I will try to do is to find time to watch the video, and then I'll share my thoughts. And if I can do that before the next podcast, I will. If not, I will most certainly get back to you, though, because I do appreciate you sharing the content. Another question on a project I'm not familiar with. ZIL, ticker symbol ZIL. Sorry, I don't have the answer to this question. Did reach out to you and ask you references on this, and I can give you any thoughts I have, but I'm not super familiar. Here is what I deem to be probably the best question that I got on the Twitter questions. What lessons have you learned from this bull cycle? And this individual, Crypto Natdog, says, I've learned to always have some fiat on hand to take advantage of the inevitable dips. So I would say that's a great lesson. If you can have some, if you always have, I don't know what it is, 5%, 10%, I don't know what depending how heavy you are in, 15%, 20% of your portfolio is in fiat, just waiting for dips. I don't think that's such a bad strategy because there's been plenty of times we've taken deeper dips than what I was anticipating. Now, what lessons have I personally learned from this bull cycle? I gave this a little bit of thought coming in to the podcast, and I would say the biggest lessons that I'm learning is no matter how sure and how well educated you are on things, and this kind of goes back to this 12-hour Bitcoin video that I put out there, there's probabilities for every scenario, and so you sort of have to accept the fact and be prepared for every single probability to play out, even if you're convicted. So I'll give you an example, because I love this question. This is the best question I got. So I thought November and December month to date would have been a lot more bullish, right? But the fact is they have not. And so what I have to do is I have to efficiently respond to that. And the way I can most efficiently respond to that is to remain unemotional and continue to evaluate the charts that I have been evaluating and be honest with myself and asking myself, has anything in the grander big picture changed? and accept the fact that no matter how much the data was telling me one thing, sometimes it just plays out a little bit differently. So really just being prepared for all sorts of different scenarios. And I think to your point, I think having more fiat on the sidelines would really be a good strategy as well. So I think that's also something that I should consider and others should consider as well. So very, very good question. Thank you for asking that. Now here, we're going to close things out here. So here is the last question. This is coming from one of my stronger supporters within the community. So thank you for the... I love your Twitter handle, by the way. At Len Wambo. I always screw it up because obviously the natural pronunciation is Wen Lambo. So I love the creativity on the Twitter handle. But Randy is definitely one of my biggest supporters. So what he's asking here is why, and this is a great question, by the way, why the 3 picks for the Holy Crypto Trinity, the HCT? And in addition, has my view changed on any of the 3 since the HCT video earlier in the year? So on the latter half for price projections, I wanted to get an update video out there to share current thoughts. I would say I at some point I'm going to have time, and based on the fact that this cycle is lengthening to some degree, whether again it's a month or 6 months or whatever it's going to be, I should be able to get a video out there. In general, my view has not changed. But what I think I can do in putting an update video together is providing a little bit more specificity surrounding my thoughts on some price projections and relativities to one another between the 3. So, good question, and I'm hoping there's more details to follow in the coming months on that one, whether it's January or February, to get something out there. Now, the other question though that he's asking here is, why did I pick these 3 specifically for HCT? This is a great question. So there's a couple things to absorb within this answer, and let me make sure to hit on all this. Now, first off, all 3 components of the Holy Crypto Trinity, from a technical perspective, needed to have a strong chart. I needed to look at the chart and really, really liked what I saw. The chart needed to look beautiful to me, okay? Because as a technician, which is my bread and butter, I needed to be comfortable with the chart. The second thing is from a fundamental perspective, and again, if I'm creating some sort of entity or alliance or naming convention for 3 specific crypto projects and creating an entire video on it and paying someone to do the artwork for it, if I'm putting that much credence behind it, there's got to be some fundamental things going on. So what I would say is, first off, the king, H-bar, the thing that I liked about Hedera were all of the partnerships, the governing council structure behind Hedera, and the game-changing technology that is really Hashgraph, which is a rival to blockchain technology. It's innovative, and it's far superior to blockchain. So all those things fundamentally, and then on top of it, the chart, is why H-bar is in the Holy Crypto Trinity. One is a layer 2. Harmony 1 is a layer 2. Bridge crypto. And again, with the partnerships and development team, and like I said, the strong view within the technicals is why that one's in there. And I'm also going to make a concluding thought at the end. And then third, you have Decentraland Mana. I mean, the idea, this is an NFT play, the idea of virtual land, and someday that being a super big thing within this generation, made way too much sense to me. So that was the fundamental aspect on Decentraland Mana. But then when you consider all 3, what's the other thing you're noting between all 3 of these? They're diversified. Like, their use cases. None of these are the same, right? It's not like, for instance, they're not very similar. Like, if I came up with an alliance and it was XRP and XLM, there's enough similarities there that you really couldn't argue they're super, super duper different. But in this case, all of the use cases that I'm describing are pretty different, right? From a fundamental perspective. So you got strong fundamentals and you got strong technicals. And that's how I came up with the alliance, the Holy Crypto Trinity. So great question, Randy. Really appreciate it. So that's going to do it. I can't believe this is episode 26. I really can't believe there's been 26 of these things that everyone's been listening to. So if you haven't already, Drop a like, leave a comment. Again, CryptoBroz, subscribe to the channel. CryptoBroz recording will take place tomorrow on Wednesday. That thing should drop on Friday. And then I'm also going to be doing the TA video update on Thursday. So I'm going to be quite busy this week. So, thank you very much. In closing, please join me in a moment of silence for all of those I attempted on multiple occasions to get into crypto and have remained ignorant. Thank you.